All right, we're starting. Welcome, everybody. Welcome, Lucas, Michael, Piet, Pius, Raphael, Chris, Dekuna. I'm hoping I'm pronouncing your names correctly. Melissa, Margaret, and everybody who are joining us today. We're going to talk about, well, the title was Canadian dollar trading ideas, but because of everything that is going on in the world, we might actually talk a little bit about other pairs as well and all the other things that is going on in the world. Hi, everyone. Thank you for your participation in the chat box. So, yeah, without further ado, we're going to have a full day today, a full webinar today. So I'm not going to waste any time. Just for those of you who are, oh, I do have to show this one. Not because I'm forced to, but also because it's really, really important for you to know that trading on margin can result in losses that may exceed your deposit funds. Before deciding to trade foreign exchange, you really should carefully consider your investment objectives, level of experience, risk appetite, and risk tolerance. I actually have to add that here because especially with all the volatility that is going on right now, and well, generally as well, if you don't do your risk management correctly, there is a very high chance you're going to lose all your money. So be aware of that. Do your risk management properly before getting into investment. For those of you who are new here, welcome. And nice to meet you. A little bit about myself. I am Kiana Danial. I'm the CEO of Investiva. I used to be an electrical engineer. I have 2 degrees of that. I got it from the universities in Japan. I do speak Japanese. Do we have any Japanese people in the house? Konnichiwa. Nihon no kata imasu ka? All right. It seems like we may not have any Japanese. All right. So, yes, I moved to New York. I worked on Wall Street for a while. Then I started Investiva for a lot of reasons. You can find it on investiva.com. I'm not going to bore you with it, but I am a published author. We just had a new book out. I'm a professor of wealth management at a university in New York. It's called College. I've been featured on Forbes, CNBC, Wall Street Journal, Times, CNN, all those kind of cool stuff. And we have award-winning education courses. So today we're going to talk about, first we're going to have an overview of Canada's economy. I'm going to talk about a little bit about the U.S. and British pound as well, because they're very important, and I know a lot of you have asked me prior to this about those. So if we have time, I'll try to cover as much as possible. We're gonna talk about the upcoming risk events, and then we're gonna do technical analysis on Loonie crosses, and probably a little bit on other crosses as well. So we'll see how much time we will have. All right. So there we go. Without further ado, so here is a little bit about how Canada's economy is doing. Well, Canada is a country above the U.S., and a lot of Americans, since Trump became president-elect, have been saying they want to move to Canada, and there's a good reason behind that. Why? Because their economy is actually looking not that bad. They have a great prime minister. They have health care. So it isn't actually, and they have a lot of land. So it's an interesting alternative, let's say, to the U.S., especially because we don't know what's going to happen in the U.S. coming forward. But so let's get into the details. All right. So that was a joke, obviously. I hope you got it. But so Canada, their gross domestic product, their GDP growth, saw a rebound in Q3 in 2016, and that was mainly thanks to improvement in their exports. However, so we just had Bank of England, Bank of Canada statement this week, but in December, the BOC warned that more moderate growth is anticipated in the 4th quarter. So we're going to get into that to see what happened then. But looking at the available economic reports, it looks like Q4 has done pretty good. For example, retail sales was very good in October, which was a big plus for consumer spending. So they both did well. And things could get better even than this because full-time jobs reported the largest increase in 43 months during the December period. And the PMI readings also improved overall during Q4. And best of all that is that Canada finally reported a trade surplus in November after printing deficit since September 2014. So these were all good stuff, but inflation was the one that took a hit in November. So the year-on-year headline reading was still in Bank of Canada's 1 to 3% target range, although 1.2% reading means that it's about to basically scrape the bottom of the range, so it's not that good. And just as bad is basically the Bank of Canada's projection that headline annual CPI would print a 1.7% increase. So they predicted it's going to be better, but it was actually worse. And annual core inflation is also very a fair distance away from Bank of Canada's projection of 1.9% by the end of Q4. And so these were basically the downsides. We had a bunch of good things. So we had the PMI, so a bunch of good things about Canada's economy, but the inflation was what really took the hit, end of 2016. So now let's move on and see what Bank of Canada's statement said, and we actually saw a little bit of its hit on Canadian dollar crosses once the statement was out. So why, even though, so Bank of Canada decided to maintain their rate at 0.50% as predicted. Everybody was expecting that. But after the statement was out, the Canadian dollar suddenly dropped. And actually one of our Facebook, our Investiva group members pointed it out as like, oh my God, what the heck happened to Canadian dollar? So that's what happened. So we're going to go through it one by one. And that's why I wanted you to get into the webinar so I can tell you about it. So number one is that the 2016 CPI, which is the inflation indicator, downgraded, but then the 2017 CPI upgraded. So what that means is that the Bank of Canada downgraded its inflation forecast for 2016 from a year-on-year increase of 1.7% to just 1.4%. And the main reason they downgraded was the reflect of the weaker than expected food prices. And so, as we mentioned earlier, the CPI grew by 1.2% year-on-year in November, which is the weakest reading in 31 months. And so that basically was a very big hit first on. And however, on an upbeat note, the CPI projection for 2017 got upgraded from 1.9% to 2.1%, as the offsetting effects of higher consumer energy prices and lower food prices. And so that was still, so this still wasn't that bad because they downgraded 2016 CPI, upgraded 2017 CPI. So what really happened? So why did then, I mean, this is still not about why did Canadian dollar get sold so much after this statement was out? So the GDP growth, again, this is tricky, right? The gross domestic product projections upgraded, and Q3 GDP grew at a faster than expected pace, but Bank of Canada warned that the GDP growth will slow down in Q4. So we still are awaiting the Q4 results, and it will still, they said that it will slow down at least on a quarter-on-quarter basis as the temporary factors that spurred activity in the third quarter of 2016 dissipate. Year on year, on the other hand, Bank of England upgraded its 2016 GDP forecast, so that was good. And also, they expect a modest expansion in investment and export. With regards to export, on the other hand, they warned that export growth will be limited by the recent appreciation of the Canadian dollar. So we saw a ton of Canadian, like in the past 4 months, we've been seeing a Loonie growth rallies. So there is going to be literally a battle between US dollar and Canadian dollar. And since, well, actually, I would say since Trump became, it was November, yeah, so that is exactly when Canadian dollar was strong and US dollar was strong. So things kind of got out of hand. So because of that, they're expecting a modest expansion in investment and exports. Right, and that's why they think it will be limited by the appreciation of the Loonie. And despite the growth upgrades, they warned that outlook needs to be viewed in the context of elevated policy uncertainty at the global level. So this is what I've been actually talking about a lot in our investment group, because like on a global level, we like literally don't know what's going to happen. There are so many uncertainties we have. Very controversial president elected for the U.S. We have Brexit coming up. We have oil problems. We have Syria and Russia, and like there's just a lot going on. And Europe might be falling out. So there's a lot of worries that definitely at a macro level could also impact Canada's economy as well. And so they are also, for that reason, also worried about the protectionist U.S. trade policies. So they admitted that they're not sure, Bank of England, they're not sure how Trump's fleshed out trade policies will turn out, but they warned that this protectionist tilt is already evident because, well, Trump has been saying like they don't want to, he's not for free trade. He wants to just like has been bashing his allies. So there's a lot that Canada is also worried about. Aside from its expected negative impact on Canadian exports and business investments, because Canada is also part of NAFTA, where Trump has been saying like he's not a fan of. Bank of Canada, they also argue that protectionist U.S. trade policy could also weigh on the global economy by dampening global trade and economic growth. So the problem, so here what Bank of Canada is basically saying is that it's not only Canada or it's not only the U.S. that could take a hit by new Trump policies. And the thing is, though, I mean, I'm not going to say that Trump, I am going to say that Trump is pretty controversial, but we don't know what he's going to do, right? So Canada is saying that not only is going to affect and impact the U.S., it's also going to have an impact globally, and that includes Canada as well. But from a Forex point of view, then again, we get into a battle because if it impacts Canada and the U.S., then both will fall down. So it's going to be ugly. So let me just put it out there. In 2017, we just really don't know. We really don't know what's going to happen because there's just a lot of uncertainty. So, and even more than that, in their statement, it was evident that Bank of Canada is worried that the rise in bond yields of developed economies, particularly the U.S., may continue to take capital away from emerging market economies like, India, Mexico, and this could ultimately drag down the global economy. That will also drag down the Canadian economy. So from here you see, so at the beginning, so we saw some downgrades with some upgrades, but then the statement was basically pretty pessimistic started looking out with Trump getting inaugurated. Actually, it's tomorrow. So it's tomorrow. So they're a little bit pessimistic, and that kind of explains why Canadian dollar took the hit, because Bank of Canada is a little bit. They see even more uncertainty in terms of risks to the projected path for inflation are roughly balanced. However, the report, they acknowledge that the outlook is subject to considerable economic and geopolitical uncertainty. So, and so the Bank of Canada's Governor Polis was very dovish during the press conference, and particularly with regards to the U.S. election. And so I'm going to quote what he said, right? So he said that back in October, we identified a number of things which were raising uncertainty beyond the normal level of uncertainty that we would normally deal with. And so at that point, we decided we did not have sufficient information to take further monetary action at that time, given those uncertainties. And I'm arguing that in the post-election period, uncertainty remains undiminished, and that's a conservative statement. On many fronts, arguably, it has increased. So he's basically taking a very, very, very direct shot at Trump, right? So, so with that, all right, so they still don't see, so the last thing that Polis was asked if rate cuts were discussed during the January meeting, he said that he's not surprised that people are asking. They're quite open about it, and they're in a ballpark where it would be nice if this thing went a little faster, but there are things that are coming. In particular, the infrastructure program, which is well underway, should begin showing up in data, and that is going to be another key piece of reassurance as we go along, right? So just to sum it up, we had positive economic developments in Canada, right? So expectations were pretty high that Bank of Canada would maintain a neutral tone at least, or even be a little bit more upbeat because of all the things that we thought, all the traders thought about Canadian economy. They're doing well. Instead, Bank of Canada was very dovish, and he even, Governor Polis even hinted that they now have an easing bias. In fact, so that is basically when Canadian dollar sell-off started accelerating, right after he said that a rate cut remains on the table. So so now market analysts, some of them are even saying that Bank of Canada is likely to signal that it's open to using unconventional monetary policy tools such as quantitative easing or negative rates, given the overnight rate is close to zero. So that is basically what happened, and it should be noted that Canadian dollar also is likely, it likely got dragged lower by the convenient bearish people anyway, the speculators, and also the slide in oil prices that happened at the same time. So we're going to get into oil and see what is going to happen next. But so this is basically where we are right now. We have solid, positive Canadian economy, but a very pessimistic Bank of Canada, and a lot of global risk events coming up. So what are we going to do as traders? One more thing that we need to know about, Canadian dollar crosses, as you all know, is oil prices, because oil prices directly affect Canadian dollar strength, right? So before, I think in our previous Canadian dollar overview, we talked about how oil prices are looking to look very to be healthy in 2017, but now we're seeing some analysts saying that that healthy oil price outlook that it could even like get into the 60s could be very short-lived, and in Q1 we could see further rallies, but as OPEC members cut production as promised, but it will only be a temporary boost. And these high oil price levels will be challenging to maintain because the pressure remains considerably bearish from a technical point of view. So the crude oil price 2017 is probably just going to be spike first and then it could drop. So again, it's a little bit mixed. I've been just going through a ton of analysts predictions on oil prices. So what I know now is that, yeah, we could see a little bit more strength in oil, which could help the Canadian dollar. However, then it could just drop from there. All right. So here we covered the majority of the fundamentals. All right. So now we're going to just go ahead and do technical analysis on Canadian dollar crosses, as well as, if we have time, some other crosses as well. So let me just bring up my chart. So this is what we actually did last time. So I think our previous webinar on Canadian dollar and dollar CAD was when the CAD was around here, or maybe even here. So this time we can see that I really didn't change anything here. The channel still kind of looks valid, even though it temporarily, before the statement, this is exactly where the statement happened. Drop and then bang, went up, right? This was the speculation and the crazy market volatility. But it looks like the dollar CAD is still moving along in the upward channel, and we have the Fibonacci levels over here. So before I get into this, can everybody see the chart? Because this is obviously essential. Okay, great. Thank you, Chris. Yeah, so let's get started. Let's go back to the monthly chart of dollar CAD first and see what's happening. All right, so monthly chart, here's all the data that we have on dollar CAD, and so what we can see over here is that, well, the highest high of dollar CAD was at 160. It happened in 2002. Then dollar just dropped like a rock. The bottom, the lowest that dollar CAD has ever been was 0.90, and then the medium support is 0.94. The medium price level for dollar CAD that it has touched down the most since the data began is 1.30. All right, and we just started backing up from this area. So this is a very important level. And what I tell our long-term investors, right, is that sorry, just got something. So is that is the beauty of Forex market, right? It just cycles. Well, the cycle with dollar CAD is not as obvious. We haven't gone back up to 160, but this medium level, right? If you hang out around here and go in either direction, in 10 years, you're likely to make profit. And that is a long-term Forex investing kind of outlook that I'm actually starting to get into, because anything long-term is basically a lot lower risk, and that is a risk that I want to avoid. But anyway, so if you're not that kind of a long-term investor, we're going to take care of you and see what we can do. So right now, we can see this double bottom pattern on the monthly chart. This is a monthly chart. We have the Ichimoku indicator inserted into this. And the neckline of the double bottom is exactly 130. And before, right, back in end of 2015, the prices went all the way to 146. At the time, we thought that if it breaks above this level, which is which this was the basic level, the 144 was the level because it's the previous support, now turned into resistance, right? So we were, but at the time we were thinking that if it does confirm above this level, we could actually see the pair back up to the highs of 160. It dropped from there, but then now it was a massive 3-month drop. And then from there, we started seeing this gradual correction. All right, so this was all good until we saw this happening in December, the indecisive. We had 2 months of indecisiveness, massive indecisiveness in dollar CAD for the reasons that I just said fundamentally. So after Trump got elected, US dollar started to get very strong. At the same time, Canadian dollar, Canadian economy was becoming very optimistic. So it was basically a battlefield. As you know, the best pair to trade is when you have a strong economy versus, or a strong currency versus a weak currency. With dollar CAD, for 2 whole months, we had Canadian dollar was strong and US dollar was strong, and it was just a little bit of a battlefield. And then this time around in January, as you know, Trump started tweeting more often, and all that, US dollar lost ground again. And then after the Bank of Canada, and also we had optimistic economic outlook from Bank of Canada, and then the statement came out, and even though it reached all the way here to 23% Fibonacci, it kind of retraced back up, right? So now where we are at is that we are again back inside the channel. We're back inside the channel. The cloud is upward, right? So far, but then we can see like a little bit of, because of the spike. So this is not something that I'm gonna rely on, this future cloud, because this was just real market sentiment. But now today we can see that, so we have a ton of mixed information over here. The pair is trying to test above the HMO cloud. The cloud is flat, but the Kijun line, you can see that the Kijun line is crossing below the Tenko line, so that is bearish. And then the pair is back within the channel. So it's a bit of mixed information over here, which is very understandable considering the fact that we really don't know what's going to happen. Tomorrow is the inauguration in the US, and that can, after that, so Trump is not going to work on Saturday and Sunday off. He's going to start working on Monday, and we really don't know what he's going to start doing. So that is why it's just, I've been telling our group members and investors, avoid getting into new positions and try to hold on as much as you can to what you have, because it's unpredictable. None of us can read the future, and all we can do is risk management. So that really, unfortunately, I would love to tell you where to go, but yeah, I mean, if you just look at it here, we could say we have more bullish kind of signals than bearish. And it kind of looks like, yeah, I mean, we could very easily get back to 136 area. Personally, I am bullish on dollar CAD. I have been for a while now, but I'm just waiting it out. So that is the best recommendation that I can give you, especially with dollar CAD, because they're both, well, dollar crosses in general right now are going to be incredibly unpredictable. So with that, all right, I'm going to take a look at a different Canadian dollar cross. So what is the other currency that is very unpredictable right now? Who knows? British pound, right? So British pound also, right now we have Brexit coming up. Theresa May has been talking. So let's take a look at Canadian dollar versus British pound. Which one comes first? So this is something that not everybody really trades. It's a minor currency pair. I just wanted to see if there is any strong signals over here, which it doesn't look like. So pound has got a lot stronger. Other hand, and the other, yes, basically the reverse of that, right? So looks like Canadian dollar, obviously the Bank of Canada statement did its job, and Theresa May just came out and say actually right now that she is an advocate for free trade. So because of that, British pound is currently gaining ground. Let's actually see. Right, so that is basically behind what's been going on. As you can see, there is, so when you look at the US dollar crosses, things are completely different nowadays. So yeah, pound, the reason why it's been going up, I know that somebody asked me right before Anna, right? Anna asked me right before what happened to pound dollar. That's exactly what happened. Somebody came out and said that she is an advocate for trade, and that kind of pushed British pound a little bit higher up. But then again, British pound is really on the volatile level as well. We do have this concrete 1.19 level as a support, but it remains below the Ichimoku cloud. We did enter a bullish trade right here. We thought it confirmed above the Ichimoku cloud, but it hadn't. We didn't. I personally didn't wait for the third confirmation, which was a mistake that I made because I was willing to take that risk, and that is why I am remaining in my position. For those of you who haven't read my book, Ichimoku Secrets, well, definitely do. So we have 3 confirmations for Ichimoku indicator. If you have lower risk tolerance, I definitely recommend to wait for the 3rd confirmation also before getting into it. All right, so Anna, I just did that pound dollar for you because you asked. So we're going to go back to what else did we want to cover? We wanted to cover Canadian dollar versus, what wasn't our agenda? Canadian dollar versus Japanese yen. Yeah, that's a good one. All right. So, Canadian dollar versus Japanese yen. We have interesting formation over here. So again, let's start with the monthly chart. Okay. Monthly chart is very cyclic, right? The median price is exactly where it is right now. It's 86. It has tested this level a ton of times in the past. So Canadian dollar versus Japanese yen is right now not as risky as, let's say, any other dollar crosses, right? And because we have a number of median prices that the pair tests every few years, if you're a long-term investor, you probably won't have as much as a worry, because if you stay in it like a little bit long, like let's see how often does the pair hit this level. So we have 88 is this median level, is a pivot level, right? So and then we have another level over here, different color, so around here, right? Around here. Yep. So this is the basically median support. So we have the median resistance, or if you want to call it the pivot, and then we have the median up from there. So we have the median pivot, which is almost exactly where it is right now, and then we had the median resistance, which is not, it doesn't happen as often, but often enough for us, or exactly where it has hit a bunch of times, it's here. So with Canyon, what I mean by this pivot, the median pivot, is that whichever direction that you take, let's say you don't do any sort of fundamental technical analysis, whichever direction that you take at 88 with CAD yen, if you wait a year, you're likely to make a profit, right? So if you went, let's say, bullish last year on CAD yen, and then it dropped, came back up, and it kind of looks like it did test it a little bit above it, and it kind of looks like that it could go higher. It will take some time. It might even take 2 years, but there's a chance you're going to make profit. So every time you see, so there's like, okay, a 3-year gap, whatever. So if you stay in it long enough, And there is no shame with staying. There is no shame with staying long in a trade. Warren Buffett, always remember, Warren Buffett, which is one of the world's richest men who only invested his way up, he says that the his favorite holding period is forever. So that is what he says. It's not even me. All right, and that really does apply to Forex as well. Whoever tells you the only way to make money in Forex is to day trade, they definitely are lying. The only way to lose money in Forex is to day trade. All right. So I mean, you might get lucky. I've got lucky day trading, but it cannot be sustainable. If you really want to, if you want to gamble, that's a different scenario. But if you really want to continue and making money sustainably, you want to consider long-term trade. Anyway, so we're going to go back to now daily chart. So here, we identified all the pivot, the median pivot, support, and resistance. It's below the Ichimoku, but it kind of looks like it's bottomed out, right? So as you can see, like if you look at the cat yen history, every time it reaches like around this area, when it bottoms out, it goes up at least to our median resistance over here. So with that, this is our first bullish signal with cat yen, even though the pair is below the Ichimoku. So it's not a very strong bullish signal, but it is bullish enough, let's say. Or maybe topped out here. Who knows? Because so look at here. So we had it bottomed out here. It went up only to this resistance, came back down. So every time it has bottomed out so far, it has gone up above the resistance and then came back down. It is likely that this happens again. But for that, we're going to need a strong Canadian dollar and a weak Japanese yen. And from what we saw from Bank of Canada statement, that may not be the case. So we're a little bit also in dilemma. Japan, Japanese yen, they like their currency weak. So they're going to do whatever they can to keep their currency weak. But again, Trump has said that Japan has been manipulating global economy by trying to keep their currency weak. So again, we don't know what Trump is going to do with one of the U.S. allies, which is Japan. Is Trump going to take a hit at Japan and force them to strengthen their currency against their will, which will really hurt their export oriented economy? So again, we don't know. But all we do know is that we do need a stronger Canadian dollar and yen. Japan does want to keep their currency weak, and Canada wants to keep their currency strong. So ideally, this is an ideal situation. That's why this currency per cycles a lot. But again, we don't know what's going to happen. All right. So on a daily, from a technical point of view, let's forget about the fundamentals for a second. From a technical point of view, there is a very obvious double top pattern over here. It couldn't be more obvious than this. But it has been testing the neckline, which also happens to be a previous resistance. All right. So this level at 86, right, is now acting as a neckline. It formed, however. So here is where it gets interesting. So we have this neckline, but then we have this massive spinning top followed by a bullish engulfing. So this right here is now bullish. But then we have Kijun line crossing below the Tenkan line and the Ichimoku indicator. So this right here is bearish. So guess what? You're very, very indecisive on Canadian and cat yen as well, but at least we have some cues. So what you can do here, if you really want to trade something, here is my suggestion. I'm going to now use Fibonacci retracement levels. Right, so we're gonna start it from the most recent and strongest trend, which was an uptrend, and see if that actually falls. So here we can see the 38% actually kind of falls at our support level that I casually identified when we were at the monthly chart. So that shows I have to bring it up. And then we have the 23% Fibonacci level that actually, yeah, it used to be. So somebody had asked me before, how do you identify and like kind of adjust your Fibonacci? This is how I see if the levels actually make sense. And here we can see that it actually, the 23% is where yesterday we saw the pair actually tested, and it used to be previous resistance as well. So this 23% can be our key, another key level for us to keep an eye on. All right. So with that, what we need right now, so we still don't have the double top confirmation. What we do need in order to be able to, let me see actually what happens if I do this. Yeah, really not much happens. All right. So, so what we really need is to wait until Monday, because tomorrow's inauguration, it's going to be just crazy and stupid. We really don't know what's going to happen. So we're going to wait for a break below this neckline, all right, and a confirmation of a break below this neckline. Then that is when we're going to have two bearish signals on the daily chart. We have the 10 line below, crossing below the occasional line, and then we have the confirmation of the double top neck break. And that is when we can enter a bearish position. However, that bearish position is going to only be medium. And I would recommend, if that happens, your first target is obviously going to be 85.56, which can take anywhere between a week to 3 weeks to reach. We don't know how volatile the markets are going to be. And your next one, we just have to, I mean, I don't want to go and say it's 23% Fibonacci because this is crazy, but we don't know. And normally with the double top chart pattern trading, you want to go the same size from the bottom to the neckline. So this is 88 to 86, so we want to go 86 to 80. Yeah, to 84-ish, so which is going to be around here, which kind of makes sense. So we're going to target around this shadow over here, right? So the second target is going to be, I'm going to take less risk and bring it higher up. So there you go. So if we have the confirmation of this double top, these are the targets. The first and lower risk target is 85.56. Second target and medium risk is 84.89. Third target is a 38% Fibonacci level at 83.68. Alternatively, so far then now here we have this bullish signal, right? It hasn't been able to break above the neckline, break below the neckline. So what happens if it actually starts going back up? That is when we could actually argue that it might even be forming a triple top. So it could go back up and then come back down. So there, we're not going to have concrete bullish signal, but if you do want to take a risk, that is going to be a risky decision for you, right? If you want to argue that, you can say that, all right, I'm going to get into a bullish position. I'm going to target 88. I'm going to get out. Or if it turns, and then from there, if it turns bearish again, you can then get into a bearish position. Another thing is that is very likely to happen because of the volatilities coming up, all right? And you can do this with any other currency pair right now as well, right? So if it does break it below the neckline, it could be a fake break, right? We've talked about this in our beginner's education course. If it's a fake break and you do get into a bearish position and it goes back up to 88, that is when you can actually add on to your bearish position, all right, to lower your net average sell position. And then you can target 85. All right, so there are a lot of ways that you can actually play around with CAD yen. So this is the strategy. I hope you got it. And you have to wait until at least Monday for confirmation of all of these. All right. Okay, so next we are going to, do you have any questions, or do you have any recommendations for what you want me to cover? Otherwise, I'll just go ahead and cover EuroCAD. But if you want me to cover a different currency pair, please do let me know. Any suggestion on gold? No, today we're not going to, Deepa guys, higher price. We're not going to talk about gold today because I haven't done the analysis on it and I don't want to misguide you. But well, gold and dollar, US dollar, generally they do move the opposite direction. So you really have to, so that is why we're actually going to expect more volatility in gold as well. And if US dollar continues to strengthen, then gold prices could start and continue to drop as well. All right. So, and actually, so at Investive, our expert on gold is Rick. So I would not want to comment on that. All right. So euro dollar, is that Margaret asking? All right. So let's take a look at euro dollar based on popular demand. We're going to take a look at euro dollar. So euro dollar. All right. So again, this is pretty cool. Euro dollar I like. So what happened previously in the past before Trump taking office, we had euro dollar just consolidating between 105 and 115. It went up and down, up and down. In that 2 years, we made a ton of money. It was awesome every time we went up. So we had the median price of 111, and we would just get into it in whichever direction, wait for it to pan out. That was great. But we have been looking for a break below 105. And it almost happened. And that is when we got into a bearish position. But now it kind of looks like that it's going back up. So yes, there are worries that this might continue going back up and down, but the fundamentals of this is a little bit, well, stranger, I would say. So looking at the long-term euro dollar picture, it has been going up and down. It is a cycling currency, and the bottoms have continued to come up. So the first bottom in 1971 was all the way back in all the way in 0.54, which is crazy. Then it went up. It bottomed out at 0.7 in 1985. That is a year after I was born. And then in 2001, then it just continued going up and up and up and up all the way to here. In 2004, that is when it bottomed out again at 0.84. And then it went again even higher. So this is just the highs and the lows are going high. So that is something that I do worry about. I know that before we said that we are looking at parity, and we have solid fundamental reasons to support that. For one, euro can just, well, Brexit is happening. So because of that, because of the fundamentals, and because we saw this break below 105, we got into the bearish position that we did back, I would say it was a month ago. And I'm just trying to look for what the ECB just said. We're waiting for it. Yeah, we still don't have it up. Add our economic calendar. It should be out. Yeah, so you see the your ECB there, they might even intervene. So we don't have a very awesome outlook when it comes to Eurozone. Can you hear me now, Anna? I'm getting complaints that someone can't hear me. Is the voice okay now? All right, good. Thank you. So with that, because of the fundamental issues and Trump coming up, and there could be a Trump rally, and we don't know, but solely because of Euro, all the problems in Europe, Eurozone, that was one of the main reasons behind our bearish position. The second reason was the break below 105. We do have a pullback right now, and it kind of looks like it's going back to our median point of 111. It could, but it is at the same time really overshadowed by this very, very thick Ichimoku cloud. It has not been able even to go inside it, right? So after it broke below 105 and it confirmed it did pull back up. So this could be just a correction. But at the same time, then we have the Kijun line breaking above. So it's a little bit complicated right now, all right? That's what I'm trying to say. So I'm going to tell you what I'm doing and what the levels to look at are. So one of the levels that I always look at for the median price, at least in the recent years, for euro dollar is 111. All right. So we started getting into bearish position, I think right around here. Then we added up, and I've been adding to it right now. And the pair has not been able to break inside the Ichimoku, which is a very, very great news for us. But then we do have the Kijun line now kind of breaking above the Tenkan, which is a little bit worrisome. So here's what's going to happen, right? What we are going to do as traders to manage the risk. We don't know what's going to happen fundamentally in the global. So as I said, the best we can do is risk management. If you're already in a bearish position with euro dollar, I would recommend to stay, because we have the cloud, we have the fundamental confirmations on further downside pressure, and we also on the monthly chart we also have we can see that it could actually drop lower, at least to parity, right? And if it does enter the Ichimoku cloud, that is when we are going to start to really